Scott Groves here with another mortgage mystery. What are points or mortgage points or discount points? This is a term you'll hear thrown around frequently in the mortgage industry. And a point, 1 point, is just a fancy way that loan officers talk about 1%. Meaning, if you, the consumer, for any reason, are paying 1 point on your mortgage, you are paying 1% of the mortgage amount. So, for example, you're buying a house for $500,000. You're putting 20% down and you're obtaining a mortgage loan for $400,000. For whatever reason, and we'll get into that momentarily, you're paying 1 point on that $400,000 mortgage. That means at the close of the transaction, you're going to owe $4,000 in fees to the lender who is doing that mortgage. Now, here's the important thing. Why are you paying those points? Sometimes paying points makes sense. For example, on this $400,000 mortgage, let's say the free interest rate available in the marketplace is 3.5%. However, it's a particular time in the financial industry where lenders want to obtain some more money up front. They might offer you an interest rate of 3% or 3.25% if you pay that 1 point up front. Meaning the lender is just allowing you to prepay some of your interest and pay that 1 point to get a lower interest rate to go from 3.5 to say 3.25 or maybe even 3%. Now, I've worked the math on this till I'm blue in the face for myself, for my clients, for my family members that are obtaining mortgages. And usually the money you pay up front, that 1 point, takes about 4 to 5 years in order to earn back the money that you save on a monthly basis. So that spread on the mortgage payment in my hypothetical between 3.25 and 3.5 versus the $4,000 you're going to pay up front on a $400,000 mortgage. Usually it takes 4 to 5 to 6 years to earn that money back based on your monthly savings. I tend to recommend to my clients not to pay points because the average American stays in their house about 7 to 8 years and they keep their mortgage about 4 to 5 years because clients tend to refinance for a lower interest rate, or they buy, they sell, they upgrade, they downgrade. So generally, paying money up front for the right to get a lower rate where you're not going to see a return on that money for several years doesn't make sense. However, at least that's a good reason to be paying points. Sometimes less scrupulous lenders are charging you points just to pad their own pocket. So if you see that you're paying points on a transaction, but it's not lowering your interest rate, then something is going horribly wrong and you should reach out to us or another qualified lender so you can get a review of your documentation. If you need a loan anywhere in America, either our team or somebody we can refer you to can definitely help. Scott Groves with Mortgage Mysteries. If you have any questions, just go ahead and comment below this video and we'll be happy to respond to you immediately, create a future mortgage mystery video just for you, or you can email us with any mortgage question, whether you're just starting the home ownership journey or whether you're ready to start applying and get into a house this weekend.